Hey folks, Stats Canada put out its April CPI print. We're going to cover that and a few particulars of that report and where do I think it's going. I'm going to give you some insight on that. The city of Toronto just upzoned the whole yellow belt, and that is good news for homeowners. Some people are a bit up in arms, but we're going to talk a little bit about that. But it's episode 131 of the Wise Old Owl Show. I'm Vince Gaetano. Thank you so much for tuning in. And I just want to let everybody know, please subscribe to my YouTube channel at Owl Mortgage. I really appreciate your support on that. First, let's talk about the Stats Canada report that came out earlier this week. Inflation comes in at 4.4%. Okay. Economists were expecting 4.1, and unfortunately it came in a little bit higher and higher than March. So higher than the 4.3 that was reported in March, and some startling numbers. Number one, the two drivers of that were rents up 6.1% and mortgage interest costs at 28.5%. Folks, this is alarming, and it's alarming because of this reason. Number one, the February mortgage interest costs were at 23.9%. The March mortgage interest costs came in at 26.4%, and the April came in at 28.5%. This is only going to get worse. And although the variable clients have been taking the biggest brunt of those rate increases, we're now starting to see the big chunk of the 2023 renewals kicking in. And I want to remind everybody, okay, that in the mortgage business, there's a rule of thumb where 20% of the mortgage volume is written in the first quarter, 30% in the second and third quarter, and the last 20% in the fourth quarter of the year. So when you think of it, okay, we're now into the meat of the renewals. So those folks that closed in that vintage year of 2018 are now renewing, and they're starting to get that payment shock. So I'm starting to think that we're going to see that mortgage interest cost percentage increase continue to rise in the wrong direction. And it could make the inflation number very, very sticky. We all know what's happening with groceries. I'm going to get to that in a minute. But what is concerning is that more and more folks that are coming up for renewal are starting to see rates at a level they haven't been thinking about. We're dealing with some clients dealing with renewals right now. They're coming out at 269, 289, that range. They're now looking at 4.5 if they're insured, 489, 505, 515 on a conventional basis. Not very attractive, okay? And we're going to continue seeing that mortgage interest rate component in the CPI basket continue to grow, causing some stickiness on that inflation number, and could extend the length of time. And remember, I've always talked about duration. Duration of these rate levels is going to be a long time. So people are needing to adjust. Now, saw some reports about some of these companies. I want to name you some companies, and you all know what they sell because you all know the brands. You probably don't know the parent, but Unilever, Procter & Gamble, Pepsi, Kimberly-Clark, Kraft Heinz, okay? They have hundreds, if not thousands, of SKUs of products that they put in grocery stores, okay? Unilever, Dove, Hellmann's, Axe. Procter & Gamble has Tide, Bounty, Gillette, Head & Shoulders, Crest, Scope, Vicks, Old Spice. Pepsi has a slew of products, chips, snacks, stuff like that. Kimberly-Clark, Nestle. Nestle has San Pellegrino, Perrier water, Cheerios, Nespresso. Kraft Heinz has a whole bunch of sauces and stuff like that. All those companies are reporting a lower growth rate. So their volumes are shrinking. and they're increasing the prices to make up for the shrinking volume numbers. So what does that mean to inflation? Grocery prices will continue to go up, okay? As these big corporations are under pressure to maintain profit levels so their stock doesn't get hammered. So always remember who produces these things, who controls all these products on the grocery shelves. It's these big multinationals that have control over the pricing tool that will drive prices higher. So folks, be ready, get prepared, start battening down the hatches, and be aware that we will continue to see a sticky inflation number over the remainder of the year, if not going into 2024. Now, what did that number prompt? The bond market a couple weeks ago was sitting at 289, 290. This afternoon, it moved up to 336, 338. That's over a 40 basis point hike in the last 2 weeks. That's ridiculous. That's crazy. The rates are moving the wrong way. Everybody thought we're going to start seeing some leveling off, balancing off. We're starting to see rates go up. Okay, so that's going to be really interesting to see how it plays out. And I think we all have to be aware that things are going to get tighter. And there's a reason why there's a lack of listings. Okay, if I'm sitting in my house paying 2.5%, 3% in interest, why the hell would I want to move and look at higher rates? I can't even qualify for the mortgage I have now in most cases because the wage inflation isn't anywhere near where the property values have gone up, or the equity hasn't built up enough to make a move up. So we're seeing people just stay where they are. And with the extension of amortizations and that slack that banks are giving folks, there's no reason to move. Like, they're just going to stay where they are. There's no reason to do that. But I will say this, there are signs of stress. I'm not here to be all negative and whatnot, but here's some stats. We're starting to see people use their credit cards for everyday items, grocery shopping, the essentials. That's not good. Okay, you shouldn't be putting the essentials on your credit card. So people are going to start abusing their credit limits for everyday items. It's not a good sign. Loss rates on credit cards are moving up. 50 basis point increase in the last 2 months. Okay, first signs of cracks, as mortgage payments always are made first. Credit cards are being abused. Their balances are going up. Their delinquency is going up. A steep increase in insolvencies. Okay, the highest number of filings since pre-COVID. And consumer proposals are up. When consumer proposals are up, what people are doing is they're trying to restructure unsecured debt, credit cards, unsecured lines of credits, automobile loans that may be upside down, any shortfalls from home sales, all trying to be put together, wrapped up, negotiated, try to get a break. Okay, not a good sign. So folks, I don't know how this is all going to play out, but we should all be aware of what's coming. Things are going to start being a little bit tighter on the credit side. We're starting to see some lenders reduce their qualifying ratios to access credit. And they're dropping it to 2-3% on the GDS, TDS. That's an internal terminology we use. That's gross debt service ratios and total debt service ratios. We're starting to see some tightening there. And rates are starting to move up. We got some notices that some rates could be moving up next week and over the weekend. So really interesting what is going on. But we're going to keep an eye on it for all of you. And it's a really interesting situation. Last week, as some of you know, I was down in the States for a wedding, did a little impromptu show with my son talking about how he was impacted by inflation. We basically winged it, and I'm sorry if the quality wasn't the greatest. We were in a hotel room trying to get a good reception, but thanks for those that tuned in. But they're really struggling down there. I talked to a few realtors, a few mortgage brokers that I know down there, and they're basically saying refinances aren't even happening. okay? And think of their world. They have 25, 30-year amortizations and terms on their mortgage, which makes no sense to break and refi. Like, why would you go from 3% to 6%, right? Just stay where you are, live within your means, and just go about it till things improve. But there is no refinance. There's no market as far as listings are concerned. Everything is pretty much status quo as far as lack of listings for a long while. So I think we're going to see more of that. But if the cracks start happening, you could very well see situations where people just can't take it anymore. They need to eat, they need to function, they need to live a reasonable life. And we're starting to see a few situations here in the office where we're helping folks out at renewal time. And some lenders are really bending over backwards to assist. Some are offering 40-year amortizations on a renewal client if they're in dire straits. They're trying to do whatever they can so they can stay in the house because the renewals are going from 3.69 to 8% on the alternative side. These are folks that had 1-year terms, okay? So they're really feeling the heat, and there's not a lot of equity there because values haven't really moved in the direction they should in the 1-year period. So I have to give credit to the lending operations and the renewal departments in some of these lending operations. They're working with some really tough situations and doing everything they can to assist and prevent a really tough situation from taking place. So hats off to them. They've been very patient. They're very accommodating, and they're doing everything they can to help out. So hats off to all my friends at those renewal departments that are taking extra measure to help out their client base. I got a couple questions here. Wow, we got a great group today, 50 people, wow. Anthony Rico, does a real estate agent have to disclose if a murder occurred recently in a home? Thinking of putting in an offer on a place but getting big ghost vibes. Yes, they do. If they know about it, they have to disclose it. And check the address on Google. I'm sure something will pop up, but they definitely have to if they know about it. But folks, I want to talk about how inflation's taking its toll. And I'm going to go to my weekly Porsche used car tracker. As everybody knows, I've been using this data point. I get a lot of comments about it on Twitter and stuff. But this week we saw a really big jump. Okay, 2 weeks ago, I think we're sitting at 1,054. Okay, used Porsches for sale on Auto Trader. I use the tool on their website where you could look up all used Porsches within a 100-kilometer radius of where I sit at Dufferin and Orphis, just south of Yorkdale. And this week, it popped from 1,054 2 weeks ago to 1,124. Okay, now that is a jump of 70 more Porsches for sale than there were 2 weeks ago. But, and people say, well, Vince, it's nice weather. This is the time to get the maximum dollar. The reality is they're available. And they're available for a reason. Usually people who own these things covet them. Okay, these are their toys. These are their status symbols. And they're obviously coming to a point where they're saying, I can't afford it anymore, or I need the cash, I need to liquidate. And we're seeing more and more toys up for sale, which means two things. Number one, people need cash, or number two, people are being prudent and battening down the hatches, getting ready for what's coming. They're getting rid of the excess. And that's not a bad thing, okay? When you see trouble ahead and you see bumpy times moving forward, the best thing to do is be ready for it, okay? And as I've talked about many times on this show, budgeting, pull out your bank statements, pull out your credit card statements for the last 6 months, print them out, look at what you're buying, look at what you're spending money on. Unfortunately today, most of us live on online tools. We only see the last 4 or 5 transactions in our account. But when you pull off that bank statement and you see a slew of transactions, you could go through them and see what you're spending money on, you can start making some really good decisions on what you could cut out, okay? And it's a really good exercise to identify any memberships or subscriptions that you're paying for that you've forgotten about and you don't use anymore. Good opportunity to cancel them. Good opportunity to call your cell phone provider and renegotiate your rate. Tell them that the competitor is offering a better deal. See if you can negotiate lower rates, okay? They want to keep your business. They do have a retention team that's there to help shave some costs. Bombard them, call them. Try to save a few dollars where you can, because it's better in your pocket than someone else's. Okay, you're going to need it. And keep an eye on what you're spending money on. It's really, really important that we all prepare ourselves for what's coming so we could withstand it. We could, get through it in a year and a half. We get past it, rates settle down, get back to some normalcy, but it's going to be a bumpy road, and I think the key is trying to prepare everybody for it. I want to go to our grab bag. Get a lot of questions. A lot of people ask questions. I thank you for them. We're going to grab a couple. I'm going to mix it up here. From Sustainable Hair _ that's a great handle. Vince, where do you see home prices going if rates rise? If they raise rates again? Sorry, Vince, where do you see home prices going if they raise rates again? So if rates continue to go up and there's this high level of interest rates, people are going to start feeling the pinch, especially at renewal. And as most of you are aware, if you watch this on a regular basis, we have 1.1 million mortgages coming up for renewal in 2023. And the big chunk of them, 60%, are going to be renewing in the second and third quarter. That's April through to the end of September. If these folks are unable to withstand the payment shock from those higher interest rates at renewal, you could see them starting to make some decisions about downsizing or maybe getting out of the mess, okay? It could very well help with supply. If it does in a tsunami type wave, it could impact values negatively, okay? If banks continue to provide the support, the latitude to help these folks by stretching out their amortizations at ridiculous levels, then there won't be much being sold. People just stay where they are. Because some people will say, well, where am I going to go? I can't even rent because there's no places to rent. So I think the Toronto core is going to be very strong. I think the one thing that has come about is the Toronto City Council's decision to upzone the city, where people are allowed to build up to 4 units plus a garden suite or a laneway suite. So possibly 5 units where it's available to be done, could pose a flurry of activity for some homes that could use that renovation. So I think the City of Toronto is going to do very well. I think values, regardless of where rates are going to go, are going to be very strong. I think there's going to be tremendous opportunity in the city. And where I see some concern is the 905, those bedroom communities where people have to commute. The traffic is getting worse and worse in the city. I saw a post today, someone was walking down the street, up Yonge Street, for about 5 minutes. Not a cyclist was even in sight on this beautiful sunny day in that bike lane. So, these things aren't even being used, but they're holding up traffic. It's causing a lot of problems. These commuters are going to have a challenge. So I think Toronto's going to do well. 905 could struggle. And we'll hope that rates do settle. We'll go into another question. From the Optimist with a 1 in there. Do you happen to see a rise in insolvency among homeowners? I don't think there's going to be much insolvencies with homeowners. I think the first slew of insolvencies will be those that are trying to get by with unsecured credit. I think homeowners for the most part, have equity in them, okay? So if you do have equity in your home, you're not gonna go insolvent. You're gonna go insolvent when you're in a negative position. I don't think there's that many folks in the home ownership segment that will go insolvent because, for example, those folks I talked about that are coming up for renewal from 2018, they got a lot of equity built up in their home. So they may face payment shock, but the one thing going for them is they built up equity over the last 5 years, even though there's been a correction in the last 12, okay? From 2018 to 2022, things almost doubled. For argument's sake. Maybe double is a little bit of a stretch, but they did go up significantly. So I think they're going to be okay. It's a matter of where do they go because the affordability issues there. So we are seeing insolvencies go up. I don't think it's that sector. I think it's more businesses. I think it's more folks renting that are over leveraged with unsecured debt and don't have a lot of assets. But thank you for the question. I'll take one more. The GTA real estate investor. These rates seem to be sticking around for longer. Survival of the fittest? Question mark. Pretty much. It's all about budgeting. As I mentioned earlier, try to control the expenses. Make sure what you have coming in can make your payments, and understand that you will never see the rates at the levels we did during COVID again for a long, long time, okay? So Bank of Canada's meeting, I believe, on June 7th. So they're coming up with a big decision. They're gonna have to decide what to do. I don't think they're gonna do anything. I think it's gonna be status quo. I think they're gonna wanna see another month or two of inflation numbers before they make a decision. Listen, I've always believed that the inflation numbers are cooked. I think that inflation is running at a higher level than it was reported at 4.4. I think it was a little bit more than that, but they're trying to keep it close so they could really control the narrative. But for the most part, I think we're going to be status quo for the Bank of Canada, although we are seeing fixed rates move up in that regard. So it's an interesting time, very, very interesting time. Mama of two. If you sell an investment property, do you pay capital gains or is it considered income? Very good question. So when you sell an investment property and you sell it for more than what you bought it for, you will pay a capital gains on the lift. So I'll give you an example. You bought a place for $500,000, you rent it out, you sell it for $1 million, you've gained $500,000, and that's on the assumption that your rent covers your expenses and you didn't depreciate the property, okay? So all of a sudden, you have a $500,000 gain. In Canada, 50% of that gain is taxable. So on $250,000, which is half of the gain, you will pay tax on at your rate, your marginal taxable rate. So if you're at a 40% taxable interest rate, you'll pay whatever it is on 250. It's about 100 grand. If you're at 50%, you're gonna pay 125 grand. If it's owned by two parties, you split the profits, you put the difference on each other's income, and hopefully you're at a lower tax break than the 250 will push you over to the maximum. So hopefully that answers your question. A lot of people today. Wow, this is fantastic. So folks, if you guys have come in, I did a special segment on my YouTube channel, Owl Mortgage. It is an inflation special that I did a little segment on. It's about 7-8 minutes. Please subscribe if you can. I'd really love your support. And if you have a chance to go to our website or go to Google homepage and give us a 5-star review if you like the content, you like the format, I'd really appreciate that. Everybody's telling me I need more Google reviews. So if you guys could help out in that regard, I'd really appreciate it. The circular, Kathleen_wealthplancoach.ca. The circular problem: higher rates, higher mortgage, higher rents, higher inflation, higher rates. Government could reduce inflation by reducing rates at this point. When will they? Tiff, the static dragon, as I call him, is handcuffed. I think what has happened is it's very difficult for the Bank of Canada governor to control inflation when the government continues to print money. The amount of stimulus that the government provided during COVID is ridiculous. These rebate checks is problematic. I think the better approach would have been to eliminate the stimulus, get rid of the carbon tax temporarily, stunt it, okay? April 1st, we saw another slew of carbon taxes kick in, okay? We saw it impact the price of fuel, we saw it impact alcohol and all that stuff, and people say, yeah, well, it's only a certain percentage, blah, 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 blah. The reality is it drives up prices, okay? And when it drives up prices beyond what the wage inflation is, people have less discretionary income, and it causes more pain. And sadly, we have a government that doesn't understand finance, doesn't understand monetary policy, and is creating a vacuum of higher prices, higher inflation, homes are unaffordable, and it's creating a real problem. And they don't answer questions, they don't listen, and they basically march to their own drum. It's tough. It's really tough. It's not going to get easier. But what we can do is look after our own household, look after everything under our roof, and try to do our best. Rent out a room if you can. Clear out your basement if you're not using it and put a basement apartment in there. Try to do what you can. Find a part-time job. You have to do what is possible to help yourself. Budgeting is key. If people need help with this, reach out to me. I'd be happy to walk you through different strategies and tips to give you a hand, okay? And that's so important. I assume you're a wealth plan coach. You know all this. I'm sure you're helping your clients with this. If there's anything you could add, please do so. If you have any links, any worksheets that you could share with me that I could pass on to my clients, I'd be happy to use them. But the key here is understand that you have to look after your own household first. Can't worry about everything else. Government's not there to help you. Government's not going to help affordability. As a matter of fact, our housing minister is bullish on real estate. At his last disclosure statement, he bought a third rental property last month. Okay, this is the housing minister. So if he's bullish on real estate himself, what makes you think housing affordability is coming? It's not. It isn't. It's almost comical. So you have a government that's not working for you. They're working against you, and they're going to make things harder. And they're making you believe that things will get better, and it's all bullshit as far as I'm concerned. So regardless of political stripe, these politicians are not there to help you. They're not. And, we got a mayoral election in the city of Toronto. We got 100 people running, over 100 candidates, which means someone's going to win with maybe 10% of the vote, and it's going to be another gong show. So, we might see the return of the Rob Ford days here, where it's just a comedy show every day. But, we'll see. We'll see what happens. It's crazy, but, it is what it is. Heart and Soul GTA. Actually, a murder does not need to be disclosed unless the agent is asked about it directly. It is considered a psychological stigma and not a latent defect, but they can't lie if asked about it. Okay, well, Damos, thank you. Lambros. Lambros is a great realtor in the Mississauga area. And for those that don't know, we are holding a charity softball game on June 11th in Mississauga. More details to come. Lambros is hosting, is going to have his team from Royal LePage. OwlMortgage's got a team. We got shirts and everything. We're going to have some fun. If anybody's around, ask me for details. I'll send them to you, but we're just nailing down a few particulars, and we'll share them with everybody. But I really appreciate the answer to that, because I really thought you did have to disclose, but I guess it's only if asked about it. So thank you so much for that answer. Very, very helpful. That's good to know. There you go. Princey Mortgages. A home in Clarington yesterday sold $120K over asking, but was it listed low? I don't know. Mother of Trinity Storm. The prices only go up, and the government will make sure you stay in your house. There you go. What a great group of comments and questions here. We've got a great group today. Anybody have any other questions? Mama of two has another one. If the property was meant as a flip and was not rented at all, is it still capital gains when you sell it, or is it considered income? It's capital gains. Okay, if it's not your owner-occupied home, it's a secondary residence, and it wasn't rented out, and you're selling it within a very short period of time, it will be considered capital gains. You know what? At the end of the day, CRA will catch up to you. So it is what it is. You know, if it walks like a duck, quacks like a duck, and looks like a duck, it's a duck. It's not a camel, it's a duck. GTA Real Estate Investor, any garden suite lending options for development or on existing property? Very good question. For those that watch on a regular basis, I also run a MIC. Our MIC is really bullish on garden suites. So we have construction contacts that specialize in these units. We have a project that is being built as we speak. We're almost at completion. We're at the kitchen stage at this point. Flooring's going down. We're gonna have kitchens in about a week. Someone asked if I should do a show from the site. Maybe I will do that in the next couple Thursdays. So stay tuned for that. I'll show you what a laneway suite looks like and what is possible in the city of Toronto. But we do have private lenders that will help with the construction of those garden suites, and if you do need help, reach out to me. I'll be happy to help you out. Housing Minister, we're living in the world of haves and have-nots. Handle your money. Don't expect any help from the government. I appreciate that comment. Batter up. Yep. All right. Well, folks, we're at 33 minutes here. What a great show. So for those of you that tuned in late, I brought on a co-op student last year in September, and it was the first time I did it. A young kid came in, and you know what? I was a little bit tentative, but this kid has been phenomenal. Okay, he stayed with us for a semester, so he was here from September to January. And I gave him a little project. I said, listen, we got a little YouTube channel we don't really use. Do you mind relaunching it for us? This kid has now been, I hired him full-time, not full-time, part-time. He comes in after school for a few hours. And this kid is amazing. So he relaunched my YouTube channel about 5 weeks ago and is doing some incredible stuff. And if you can help me, please subscribe to the channel at Owl Mortgage. I've posted a little piece on inflation and how Canadians are hanging by a thread today, and it's doing really well. If you could please subscribe, give me a like, I'd really appreciate it. And if you have any questions, need any help, please send me a DM. I'd be really excited to give you a hand. And I just want to encourage everybody to be kind to people out there. A lot of people are struggling. Many folks are really having a hard time. And if you have the opportunity or you have the means to help in any way, shape, or form, buying a drink, buying a lunch, taking them out for a meal, they'll be very appreciative. They're not going to share their problems, but if you have an inkling that maybe somebody could use a helping hand, do so. You know, people don't talk about finances. It's not something people rave about and talk about. So sometimes those acts of kindnesses do help the greater good of people and their families. So please do so. Thank you. Have a great weekend. It's a long one. Enjoy it. Do some gardening. Enjoy the weather. Go Jays, go. And we'll see you all next week. Take care. Bye.